What started as a dream to build China's biggest coffee chain quickly turned into lies, greed, and one of the biggest corporate fraud scandals in history. This is the story of Luckin Coffee, which rose from nothing to surpass Starbucks as China's largest coffee retailer in just 2 years. However, this rapid success was built on fake numbers and fabricated sales, covered up by an elaborate fraud scheme involving millions of dollars. Through whistleblower revelations, falsified databases, and a complex network of fake customers, the astonishing truth about Luckin's extensive fabrications was finally revealed. This is a true crime story that will leave you questioning the lengths some will go to in pursuit of success, no matter the cost. Stay tuned and let's explore the scandalous rise and fall of Luckin Coffee. Welcome to Profit Predators Business Scams Unveiled, where the glossy facade of entrepreneurship meets its shadowy counterpart. In this series, we dive deep into the world of white-collar crime, unraveling the stories of ambition turned deception. From the boardrooms to the courtroom, we expose the mechanisms and minds behind the most notorious business scams. These are tales of greed, betrayal, and the pursuit of wealth at any cost. Stay with us as we reveal the true cost of these crimes, not just in dollars, but in trust and human impact. Your journey into the darker side of business starts now. Luckin Coffee Inc. was incorporated in October 2017, marking the beginning of its journey as a company. By January 2018, just a few months later, Luckin Coffee had already established its presence by opening its first shops in 2 of China's most prominent cities, Beijing and Shanghai. The company proudly declared the successful completion of their Series A financing round in July 2018, securing an impressive total of $200 million. This achievement was made possible through the support and investment of prominent entities such as Centurium Capital, Joy Capital, and GIC. The company had expanded its operations significantly in October 2018, boasting a network of 1,300 stores. This impressive growth propelled it past Costa Coffee, establishing it as the second largest coffee brand in China. The company used technology to make ordering and delivery easier through an app. This quickly made it popular among coffee lovers across the country. Luckin Coffee boosted its market position through a partnership with Tencent, leveraging its digital platform. Their expansion was fueled by aggressive marketing, even outspending earnings. They revealed plans to open 2,500 more stores in January 2019 to surpass Starbucks in China, showing their determination to lead the coffee market. Luckin asserted that it served over 40 million customers by the end of 2019, becoming the largest coffee retailer in China and surpassing its competitor, Starbucks, in the region. To boost its market share, Luckin Coffee implemented an aggressive promotional strategy, offering significant discounts or free products to customers who used coupons through the company's app. This approach was designed to attract more customers and encourage repeat purchases by making their products more affordable. Customers had 2 options for purchasing products. The first option was to use a third-party digital payment platform, such as WeChat Pay or Alipay. These widely used platforms allowed for seamless and convenient transactions. The second option was to redeem coupons through Luckin's own app. Customers could buy these coupons in advance by transferring money from their WeChat Pay or Alipay accounts to the Luckin app. The company's aggressive growth strategy, heavy discounts, and innovative marketing campaigns attracted massive investments, leading to a highly successful IPO on the Nasdaq in May 2019, with shares trading at $17 each. The financial press called the company China's Starbucks, making it easy for investors to understand its concept. The investment climate made this even more impressive. Investors were starting to lose interest in consumer internet companies that burned through cash and couldn't clearly say when they would become profitable. Luckin was also focused on data and e-commerce. Most of its locations were small stalls for quick coffee pickups, and the customer experience was mostly online. All transactions were made through the Luckin app, helping the company build a large database of middle-class Chinese consumers. It added e-commerce features and partnered with food delivery services. This digital and optimized experience appealed to tech investors. Everything seemed to be going perfectly. Luckin seemed like a successful, fast-growing tech company, but it was hiding some problems. The first signs of trouble appeared for Luckin when Muddy Waters Research, a short-selling investment firm, published an anonymous report supported by evidence. This report leveled serious allegations of fraudulent behavior against Luckin. It claimed that Luckin had artificially boosted its performance by inflating revenue, exaggerating coupon sales, and falsely reporting redemption. The report raised doubts about Luckin's business practices, shedding light on the falsification of sales volume. It detailed how Luckin had inflated its reported sales volume by a staggering 69% in the third quarter of 2019 and a remarkable 88% in the fourth quarter of the same year. The report further raised serious concerns about Luckin's inflated revenue, false accounting practices, and the potential abuse of senior management positions. It highlighted how the company might have manipulated its financial statements to present a misleadingly positive picture of its performance. The report also questioned the extraordinary market share of coffee sales in China that Luckin claimed to have achieved. It pointed out that, traditionally, the majority of caffeine consumption in China, as in many other Asian countries, comes from tea rather than coffee. This cultural preference for tea over coffee made Luckin's reported market dominance and rapid growth even more suspicious. The report implied that it was unlikely for Luckin to have captured such a significant share of the coffee market so quickly. Muddy Waters announced that, based on their findings, they believe Luckin Coffee's share price was likely to decline significantly. Acting on this belief, Muddy Waters took a financial position against Luckin by engaging in short selling. This strategy involves borrowing shares of Luckin and selling them at the current market price with the expectation of buying them back at a lower price once the stock value falls. By publicly releasing their report, which detailed allegations of fraudulent activities and financial misrepresentations by Luckin, Muddy Waters aimed to inform the market and other investors of the company's dangerous situation. They anticipated that this disclosure would lead to a decrease in Luckin's stock price, thereby enabling them to profit from their short position. While the Muddy Waters report laid the groundwork, it was an internal investigation by Luckin's board of directors that exposed the full extent of the scandal. On April 2, 2020, the company revealed that an internal investigation had discovered its chief operating officer, Jian Liu, had falsified the company's 2019 sales by approximately 2.2 billion RMB, $310 million US dollars. It was also discovered that in April 2019, Luckin started falsifying the number of coupons sold and redeemed by individual customers. Some of Luckin's employees, their family members, and other related companies were involved in a scheme to inflate the company's sales figures. They transferred money from their private bank accounts to their WeChat Pay or Alipay accounts specifically to purchase coupons on Luckin's app. This process involved moving substantial amounts of money to create the appearance of higher sales volume. They then redeemed the coupons themselves and generated fake orders, thereby intentionally and dishonestly increasing the reported sales figures. This fraudulent activity created the illusion of a higher volume of sales transactions than it actually occurred. By redeeming these coupons and recording fake orders, they manipulated the financial data to make it appear as though there was substantial customer demand and sales growth. More than $1 million worth of sales were fabricated through the purchase and redemption of fake coupons. A month later, Luckin employees started selling the coupons to fake corporate customers. These so-called corporate customers were not legitimate businesses, but were actually connected to Luckin employees themselves. The corporate customers would use their WeChat Pay or Alipay accounts to transfer money to Luckin's app and buy coupons. These fake coupon redemptions boosted sales numbers artificially, and about $10 million in sales were faked again. After that, Luckin employees falsified the number of coupons sold to third-party shell companies. These shell companies would then sell the coupons to individual customers. It is probable that these individual customers were also employees, as they neither placed real orders nor redeemed the coupons. Some of Luckin's employees or their affiliated companies created and managed these shell companies, which transferred funds to Luckin. Employees would then alter the sender's name from the funding company to the shell company in Luckin's bank statements. Luckin's employees would redeem coupons and create fake orders, thus fabricating sales and revenue. This accounted for the majority of the fabricated revenue, about 90% of the total $311 million. Some Luckin employees replaced the actual business operations database with a fabricated one. This source data included reports essential for preparing financial statements and bookkeeping. The finance department could only access the fabricated database, making them unaware of the abnormal transactions. Luckin repaid the funding companies via bank transfers and falsified expenses. The financial statements indicated business-related expenses, showing payments to vendors, including suppliers. However, these vendors did not supply any services or products to Luckin in return. Luckin also falsified costs to align with the inflated revenue. In 2019, the total fabricated expenses and costs amounted to approximately $196 million. These discoveries led to significant regulatory action. The U.S. Securities and Exchange Commission, the Chinese Securities Regulator, and China's State Administration for Market Regulation all launched investigations into the company's conduct. On April 8th, the U.S. stock market halted trading on all Luckin shares due to the fraud investigation. That month, the company's stock dropped by over 80%. Goldman Sachs announced in April 2020 that it would seize and sell the Luckin stock holdings of Chairman Lu Zhengyao after he defaulted on a $518 million margin loan. The $400 million bond, also issued before Muddy Waters' report had collapsed, started trading as low as 10 cents on the dollar by April 24, 2020. On May 15th, the company received a delisting notice from NASDAQ. After a trading halt of over a month, the company's stock resumed trading. On May 28th, the company's shares plummeted by over 20% after a Wall Street Journal report revealed that firms associated with the chairman and controlling shareholder were deeply involved in the accounting scandal. Banks such as Credit Suisse secured court orders on June 22, 2020, in the Cayman Islands to dissolve Lu's controlling entities of Luckin Coffee Inc. Similar orders were later secured in the British Virgin Islands. These actions were taken after Lu defaulted on his margin loan. On June 29, 2020, the company took a decisive action in response to an order from NASDAQ to delist. It suspended trading of its shares on the NASDAQ exchange and officially filed for delisting. As a result, the company entered a state of provisional liquidation, marking the beginning of the process to wind up its affairs and distribute its assets to creditors. 12 employees who were implicated in the fraudulent schemes, alongside the CEO and COO, were terminated from their positions. By July 2020, Luckin Coffee's CEO, Jenny Jia Qian, was also dismissed from her role. In that very month, the chairman, Charles Lu, was also removed from his position. China's markets regulators in September 2020 imposed fines totaling $8.98 million on a group of companies, which included Luckin Coffee. The SEC also accused Luckin of making false statements about its revenue, expenses, and net loss between April 2019 and January 2020 to mislead investors about its financial health. After concluding its investigation, the SEC imposed penalties on Luckin on December 16, 2020. As part of the settlement, Luckin agreed to permanent injunctions and to pay a monetary penalty of $180 million. While settling, Luckin neither admitted to nor denied the allegations. On February 5, 2021, the company filed for Chapter 15 bankruptcy in New York, marking a significant development less than a year after acknowledging that more than a quarter's worth of business may have been falsified. By September 22, 2021, the company unveiled its plans to undergo restructuring. On September 30, 2021, Luckin Coffee reached a settlement in a U.S. class action lawsuit, agreeing to pay $187.5 million to resolve investors' claims. In December 2021, Luckin obtained court approval to restructure a substantial amount of debt and settle numerous lawsuits related to the fabricated sales figures. Luckin Coffee came out of bankruptcy in March 2022. The company has made substantial changes in its leadership, replacing much of its senior management. Luckin Coffee is now managed by the Chinese private equity firm Centurium Capital, which had previously invested $240 million into the company in the spring of 2021. The Luckin Coffee scandal is a clear lesson on the importance of good corporate governance and transparency. It reminds investors to be careful and skeptical, especially with companies that seem to be growing very quickly and seem too good to be true. Thank you for joining us on Profit Predators Business Scams Unveiled. Today's journey through the intricate webs of deceit and ambition reminds us of the price of unbridled greed. As we conclude, remember, awareness and integrity are our best defenses in a world where profit can often precede principle. For more insights and stories that peel back the layers of the business world's darker side, subscribe and stay tuned. Together, we'll continue to share stories that shock and shape our marketplaces. Until next time, stay informed and always question the integrity behind the profits.